Like someone already left. That's fine. So what I want to talk about today, I mentioned it to Mike some time ago about inefficiencies, something I've been posting a lot about lately. Wanting to pay attention. And I don't know, Mike, if you're watching it, you've been watching it lately on the 15-minute, kind of see where the market goes, and then you try to find your entrance on a 1 minute. But I want to go through inefficiencies. Last inefficiencies, the first inefficiencies. So really, it's the first inefficiency, not the last. But the first inefficiency in a move up and a move down is very important. That's going to have a lot of dictating information on a continuation or not, or if we're having a reversal. I know KB05 was. This was the other night when we were trading gold late at night with a few people. It was me, him, and I think like one other person. But we were sitting there talking, and we were discussing. What would it be? It was. It was right here. No. Um, do I have? Oh, I'm looking at the 15-minute. No wonder it looks a little different. Pretty sure this was the night. Yeah, Thursday. The market hit all-time highs, leaving these equal highs here. It's actually left a lot of relative equal highs through this area. So I can see gold pushing back up for them. It's going to want this. But we were sitting there talking, and he was telling me, I was telling him he should go long, and he was telling me it hadn't really hit any inefficiencies yet. Well, I hadn't really taken any much liquidity when it really had. It had swept all of this going down in this run up. And then it tapped into the very last inefficiency, which is right here. Now, if we add this line here so that I can go to the 15-minute and look at it. This was the very last inefficiency because we have sell side, and then when the market came up for buy side. And so this was the very last inefficiency that if the market wanted to push further down, it would have closed through this, and then we would have had further sell side. So that's kind of what I want to go over today with everyone is inefficiencies. Just kind of show you guys, because a lot of us pay attention to everything going on in the middle, and that can be a recipe for disaster. A lot of failed targets, a lot of misses, a lot of stop losses hit. So because of that, I was working yesterday doing a one-on-one, and I went through this with them, trying to show it to them, and it's a good place to start. Not only is this going to break down past movement from the week, but it's also going to kind of help show you things that the market's doing as well. So let me pull this up, my new day divider, because it splits the days up for everyone. But we're going to start here. So this was the very low we had before we made our real first push up to all-time highs. That's when we really got into the 25,000 for the first time. But you'll see on the 15-minute, this is the very first fair value gap presentation that was created. So this was the very first inefficiency that was created in this run up. So that's a very important one, because if the market's going to have a continuation, not only does what happens on the left side get copied on the right side, but if the market's going to have a continuation, it's going to tap off that last inefficiency and then respect it and push higher. If it's going to want to take sell side and go lower, then you can expect a major reversal beginning to happen in the market. It's going to close through that, and it's going to start taking the sweep and sell side below. Now, what we're going to see here is there's multiple moves happening, as you can see. We have this orange arrow and we also have the purple. So there's two separate moves I'm going to show you guys, but it all coincides together. So Friday we created this high. Now what happens on Monday? I've posted in the lessons before. Monday is going to usually take Friday's high or Friday's low. So we had market open up right here Monday morning and it swept Friday's high, literally within the first hour. From there, we continued pushing into all-time highs. I'm guessing most likely because of news and everything like that, because when you're going at all-time highs, there's really not any liquidity above that's driving it. So it's usually good. It's just the market pushing up. That's why I don't like trading all-time highs, because you don't know how far they're going to push it. The only thing you can use is standard deviation. And if you want to learn about standard deviation, you got your boy Riz in this chat. He loves standard deviation and he trades off of it and he's a freaking pro. It's not my favorite thing to do. I will trade it sometimes. Don't prefer it. I'd rather be able to have targets, but he's a freaking whiz at it if you ever want to ask him questions. But we created this all-time high right here on Monday at 3:15 p.m. From there, we had taken some sell side beforehand before we took buy side, but we did not take Monday's low. This was, we did not take Friday's low. Friday's low was right here. So we took sell side, which allowed us to push higher. Now, if you see, this is pre-market. This is the London session. So London session, we came down. We swept sell side liquidity, which what's that mean next? Next, we're going for buy side. If we wanted to take further sell side, we would have tapped into past this fair value gap. Now, one thing I want to point out to you guys, what do you see right here? This is an inefficiency. What is it? The last inefficiency in this run up. Market ran up, came back down, tapped into that last inefficiency, then we pushed higher. So pay attention to that stuff, you know? From there, we went up. Like I said, we make all-time highs. We consolidated that point because we had taken some sell side and we had taken buy side in the day. Now, Tuesday opens up. So either Tuesday we're going to make the high, or on Wednesday we make the low, or Tuesday we make the low, and then Wednesday we make the high. So on Tuesday we did make the high, but we failed to take buy side liquidity, which happened right here. We were off by probably a few dollars. So the market pushed back down. Now, like I said, the market will balance out everything on the left with everything on the right. The right always balances out the left. As you can see, it literally mimics this movement right here. We have this push up, a little consolidation, push up. What do we have here? We have this push down, a little consolidation, this push down. What's it do here? It taps into this very last inefficiency here on the 15-minute, respecting it, right? So the market pushes back higher, which is a sign that it's, and I mean, it didn't go too far. I mean, we went from 791 to 880, and that was during the overnight session. Now, the market stopped in this area because of this fair value gap. Now, what I want y'all to see is it's a very, very small fair value gap, right? But look at it in this leg. We have this push down. So buy side, sell side, buy side, sell side, right? So from this buy side to sell side, this is the very first fair value gap that was created. What does the market do? It taps into it. That's the very last inefficiency. And from this run into here, it respects it. So what are we going to do now? Tuesday, we made the high up here. Wednesday, we're going to make the low. So market comes down. We sweep through. Oh, heck yeah. Sorry, guys, off topic. Hey, babe, I know you're in here. Guess what? So the lady with the kitten just said the cat should be approved for surgery on Monday, so we'll be able to get it Wednesday. Or Thursday. Thursday, I mean. Heck yes, I'm excited. Sorry. All right, back on track. So we respected this high. We respected the very first fair value gap that's right here in this area. What does market do? And it also sees all this liquidity below because we're now in a bearish downtrend, right? Because like I said, what happens is whatever happens on the left will happen on the right. Market always balances out the right with what's on the left, no matter what. The only difference is if you're going to see a continuation, that very first fair value gap or that very first order block will get respected and we'll have a continuation to the other side, back in the direction we just came from. If we're going to continue in that direction, then it's going to sweep through that, and we're going to take the liquidity on the other side, and then we can expect the market to continue in that direction. But so market respected this very first fair value gap, but also respected the order block that's right here. So what we did was we pushed down, we swept Tuesday's low, we swept Monday's low, and we swept Friday's low. Correct? And so, and now if you look, sorry, you see right here, this is a order block right here in this area. This is the last resort for if the market's going to continue further down, which the market respected. You're good, Crimson. So it tapped off this order block right here and pushed back higher. Now, what did I also tell y'all the other day? The only time you pay attention to things in the middle are when there's proportion blocks, right? So what do we got right here? We got a proportion block. Market tapped off that proportion block. But also, if you can also use this wick that's right here, and the market tapped into that wick. So price was considered balanced at this point, which allowed us to push further down. It did not need to go up, and it didn't need to go up and rebalance anything. Because one thing I have taught y'all as well is when you're looking at the 15-minute is a beautiful place to look at inefficiencies for. It's a wonderful place to look for inefficiencies. Because when I say if it's covered, if it's been covered, let's draw this inefficiency out, right? This wick tapped into that inefficiency. So that inefficiency has been covered. Now, we come further down. This inefficiency was covered. This inefficiency was covered, and this inefficiency was covered. So we come back down. We come down further now. Oop, whoopsies. Now, if you look right here, draw that out, you'll see on the 15-minute that this candle and this candle tapped into this fair value gap. That considered it balanced. So that's why price didn't have to retrace higher and close through it. That's what allowed it to continue further down. So that inefficiency has been covered. You look right here, this inefficiency has been covered. This inefficiency has been covered. So there was no need for the market at this point to push higher. It had no reason to push higher at all. So the market rejected this proportion block, which you can call an order block as well, if it makes it easier for you. Because I mean, it is one green candle followed by 2 or more black candles. So that could be considered a bearish order block, but the proper name for it is proportion block. I just learned about that not too long ago, probably about a month or 2 ago. Didn't know proportion blocks were a thing until my mentor mentioned it about it in ICT videos. So what does that mean? That means we're going to attack this sell side some more. So markets comes down and sweeps Wednesday's low on Thursday. Now, remember how I told you if the market's going to want to push lower, it's going to close through that very first fair value gap that's created. What happened here? The market came down, tapped off of it, respecting it. And so, this is what I was telling my buddy yesterday when we were doing the one-on-one session. I was telling him this: if you see something like this, that is a beautiful sign to go long right then and there. Beautiful sign to go long. Beautiful sign to go short. You see this very first fair value gap, the market's respecting it. We failed to take buy side. That's a beautiful sign to short. You could ride this for a few days and really collect money. Depending on if you're using a prop firm or a live account, of course. Now, from there, we did have a little bit of consolidation for basically 2 days, if you look at it. This Thursday was a better move than Friday, truthfully. But we came down, we had swept all of this liquidity. Like I said, we balance out what's on the right with the left. The left was balanced out at this point. Market's considered balanced below, has no reason to go any higher, any lower. That's why it stopped there. It respected that last inefficiency for a push up. So now let's look at this. What's the market do? We come here overnight. Oh no, this was market open. So 9:45, we have this reversal. Push back up, we take buy side. We respected this proportion block right here. We pushed back down, took sell side. We're consolidating. I'm sure if you drop down on a lower time frame, you'll see why it stopped right here. But from this push back up, this is the very first fair value gap that was created. So the market created this high right here, failed to take buy side. We came down, we consolidated, taking some sell side, it came back up, took buy side, came down, took sell side, came back up, took buy side into Friday morning, 8:30. From there, we came down, we took sell side. What's the market doing right here? It's respecting that last inefficiency. So what happens? You could go long right here. Market pushes higher. Now remember how I showed you all this inefficiency right here on this beginning of this push down right here? What's the market do? It taps into it and respects it. It's a beautiful opportunity to go short. So market taps off of it, respecting it. And what happens? We have a push down. Now you look right here. This is the first inefficiency created on this down move, right? So for Monday, we create this high. We tap off that last inefficiency, respecting it. Market has no purpose in going higher at that current moment. What's it do? It sweeps the 930 open low. It sweeps, so now it's taking buy side, sell side. We have this stupid consolidation the rest of the day. We open up into Tuesday. And look, don't forget this. Monday, we took Friday's high. Monday's always going to take Friday's high or Friday's low. I've never seen it not happen. So market comes back down. Market comes down, creating equal lows. Yeah, sorry. Price is considered balanced below. If I change trading hours, I'm sure it would show why we rejected there. But we had this push back up, correct? Leaving these equal lows. Now, what did I tell y'all? Very last inefficiency from this push down that we had. From the start of the high to where we were here, that's the very first fair value gap created. Market tapped on it, respecting it. Very good sign to go short. So market comes down, respecting it. So that means it wants these equal lows here. It's going to take Tuesday's low, which was the one that was created here. Now, did it happen on Tuesday? No, it happened on Wednesday. Market came down, it swept these equal lows, it swept Tuesday's low. So what happened? We tapped into this very last inefficiency from this push up. The very first fair value gap, once again, pushing higher. Now the market closes through this. You could have used this for an entrance. You can see it played off of it right here. Market closed through this. You can see it played off of it right there. Higher back up into all-time highs. We sweep. Why do I just have one long blue line? That shouldn't be there. We sweep further up into all-time highs. Once again, you'd have to be using standard deviation for this. But we came up overnight. We had this push down, respecting this fair value gap to the push up to all-time highs. So market opened, we took sell side. Sorry, I yawned again. Market pushed down. We swept all this sell side from this run up, creating equal lows right here. Going into Thursday, we closed here. Now Friday around 1 in the morning, we took Thursday's high. Consolidated through the rest of the night. Friday at 6:15 a.m. We created this high here. We had this push down for liquidity, and we swept these equal lows, and we also swept Thursday's low. Now, market then continued. We had taken buy side, we had taken sell side. What's next? Buy side. So market pushed higher on Monday. We took Friday's high. Right here. Then from there, it goes into standard deviation. So that's why, once again, that's why we had a rejection around this area, because it's all-time highs. Market comes down and we sweep these lows, pushing back up from there. So buy side, sell side, buy side, creating this high right here. As you can see, whatever happens on the left, the market mimics on the right. So we created, now you can call these equal lows because they are so close together. Some people don't, they'll call them relative lows. Some people will call these equal lows because of how close they are together. That's a lot of liquidity that's resting here, here, and here. So the market comes up, we sweep Monday's high, taking buy side, and then that's when we push down from there. As you can see, price to the right always bounces price to the left. So we balanced it out, pushing back up into further all-time highs, which then we swept Monday's high at that point, allowing us to push down. Now you look here, we have the opening range, the opening week gap, and we have the very first fair value gap that was created when the market opened on Sunday. So what's the market do? It taps into this very first one. It also taps into the opening week gap, respecting both of these. That's a beautiful sign, once again, to go long. So what happens from there? We push higher once again, going back up in all-time highs. Wednesday sweeps Tuesday's high, so we've taken buy side. And then we reject a standard deviation once again in this area. So we come down and we swept sell side. Now, like I said, the market's going to continue further. You're going to see that first fair value gap get wrecked, and that's what happened Friday, y'all. I mean, that was a crazy day. I can't believe I didn't trade it. I was too busy trading gold when that happened. But we came down, we took the sell side, and we had this push back up into Friday morning. Friday morning, we failed to take Wednesday's high. And then like at 10:50, that's when, yeah, it was like 10:45, 10:50. That's when we basically reset ourselves. This entire run, we reset. It was just a huge reset in the market. As you can see, from where we started, where we finished, the market swept all of that. And then that's when we came into this week. Now, I haven't gotten the chance to really draw out this week, so when I get the opportunity to do so, I will. I got 4 of you guys that I'm doing a one-on-one with today, so I'm going to be pretty busy, but I'll try to get it posted up. But I just wanted to run through this with you guys so y'all could see these inefficiencies, because you can see at the last fair value gap, the very first fair value gap that this gets getting created, in these run ups, in these run downs, are getting respected, and those are really good. It's called New Day Divider. Those are really good places to look for your entrances. You may miss a move here in the middle, but like I said, yeah, of course. But a lot of the stuff that's happening, that's going on in the middle is noise. And then you can always find that one wrong entrance to where you enter in one spot, and for some reason, the market wants to come back $50, only then to push to your target. That's why, unless you're using a proportion block in the middle, or you're looking at a wick to see if the market just did a rebalance and is going to push off that. That's why a lot of stuff in the middle I consider just noise, and I try to ignore the middle. Like the only, like the really the best thing you could have done would have been like this order block right here, this proportion block, using that to then take this to trade lower. Something like that that's in the middle. I don't want to play off that. You want to play off the top or the very bottom. So like here, you could wait, and yeah, you would miss a lot. But I mean, I'm sure if we drop down into the 1 minute, you guys, there would be a whole lot more entrances that you could find. But like trading off of this to go short, trading off this to go long, trading off this to go long. Those are beautiful opportunities that you want to pay attention for, especially on the 15 minute. That's going to seriously help you guys. Those are going to be your very, very high probability setups. Because I see so many, I don't know why I've seen people who will literally wait until the market gets to like right here, and they're gonna attack this liquidity that's right here, only for it to respect that first fair value gap and reverse hard on them. And now they're stomped or they're wrecked from their account. I've seen that happen. I've done that when I first started. Like I would wait for the market to get to a really close point of liquidity. Like even like right here, say this would have been something I did in the very beginning of my trading career. Market's coming down. Okay, we're getting closer to this. We're getting closer to this point right here. I'm going to enter right here in this area and attack this because the market only has to move 30 bucks. Only got to move 30 bucks. It should do that. It's already headed that direction, only for the market to go yeet the other way. I have done that countless times. Or like right here, you see the market dumping hard candles, and you're okay, I'm going to attack this sell side right here. Because obviously that's got to be what it's going for. But then you look and look at this. Whoa, it tapped that very first fair value gap in this push up. And the market going to hit that reverse panel on you. It's going to come back for it. It will wipe this. It may not be that session. But look, it got wiped a few days later. It got wiped clean. I have done that because we're over here thinking, okay, it's only got to travel $10. If the market's moving like this, it's gonna travel $10. You're gambling. We're gambling, y'all. No, we wait for that entrance. I mean, don't play around in the middle. If you're gonna play around in the middle, you're gonna play around. If you're gonna play around at the end, play around at the end for the reversal. Don't go attacking this liquidity. And this fair value gap hasn't even been touched yet. That's the first time it was touched, and it was respected like crazy. It was even this order block right here, this proportion block was respected, you know? I've done this. I'll call my ass out on it. It's happened to me. Because I was that person saying it's gonna move. It's only gotta move. Where is it at? 600? This is at 586, 14 bucks. Only to be wiped from my position the very next candle. It happens so much. And so that's why I'll talk about it. Because I would wait to that very last second because I felt more secure if we were that close to that target. Yeah, I'm making 500 bucks. Because of course, since we're only traveling such a short distance, I'm gonna amp up my contracts by 2 or 3, so I can actually kind of make some money, only to get just wrecked on the next one. 1 second. But when you want to wait for setups, if you're gonna wait for the very last one, um, wait for that fair value gap. See if the market respects it, because if it respects it, then take the reversal. If it's going to close through it, well, then you can attack the liquidity on the other side. Wait for the market to close through it. So let's say the market came down to here. We want to wait for the market to close through it, and it has to be on the 15-minute. If you're doing a 15-minute fair value gaps, you gotta wait for the market to close through it on the 15-minute. You want to see it play back, respecting it, and then use it to play further down. You don't want to just see it close through and then you immediately enter hoping that it continues straight forward. That can happen. Sometimes the market can close through something and then you're going to see it just continue to slam past it. And you may miss the trade. That's okay. You know, at least you didn't chase, at least you didn't have FOMO. And at least you didn't gamble in that situation. You followed your rules. You waited for the market to close through it, and you wait for it to retest that fair value gap, and you wait for it to push further down to your target right here. And that would have been a beautiful trade. That's from 398 to 242. That's a $150 move. Don't wait for the market to get within a $5 range of your target to then enter, thinking that, because it will happen. You're going to get lucky. We all will get lucky in the market sometimes. But there will be days when the market just rips on you, and that don't happen. I'll show you a perfect example right here. Look at this. Market created this high right here. That's all-time high with this wick. Look at this bull crap. Someone could, I guarantee someone entered around this area 10 contracts to make $5,000, or because if you do 10 contracts on gold, every dollar it moves is $1,000. Now don't go be stupid, please. Because that's a very quick way to wreck your account. A good testament of that. Like, look, here's what someone could have done. I'm gonna attack this high right here. My entrance, I'm gonna enter off this fair value gap. I'm gonna wait till we get right here. I'm gonna enter off this fair value gap, and all it's got to do from here is now travel 17 bucks, and you would have been wiped from your position within 2 candles. And then what? Then you wait for your next entrance. The market comes back up, retest, doesn't even get close the next time. And then the market just reverses, getting fooled with, getting played with. That can happen so easily. And then you're just up the river without a paddle and a blown account. Let me go back to this and let me see Cheyenne message. You're good, Crimson, for being late. Dang it, Mike. One question at the same point. Why is the fair value gap that you have shown when it becomes balanced and then the top is respected with exact top? Huh?
Hey, League, I got a question.
Yeah, what's up?
So, what do you use for like? I was trading the last efficiency the other day, and I typically use the 15-minute. But is there a lower time frame for that too, or is it? Do you just recommend the 15-minute for that? Because I'm about to back
For
test the last efficient, like the last fair value gap, like you was just talking about not too long
I
ago.
use the last fair value. Yeah. So I draw up those last fair value gaps on the 15-minute. And then you can wait for the market to play back into them and then see how it responds. And then you can short or go long. If it closes through, go long. If it closes through, go short. If it respects it, go long.
Gotcha,
That's a,
gotcha.
it's a very good opportunity for that. You start from the 4 hour. Like we go to the 4 hour. Um, let's see. It's gonna be hard to do because I'm gonna have so many blue lines. Make it another color. I didn't forget about you, Cheyenne. I'm gonna answer that in 1 second. And sorry if I didn't pronounce the name right. Okay, so there's the red line. Ooh, yeah, I had a feeling. Yeah, of course. Um, you start from the 4 hour. See how it see how the market's been responding now.
Are you starting from like the swings when those efficiencies happen, like those last swings on the 4 hour chart, or is it on the 15-minute chart where you see them?
Well, so you can start on the 4 hour if you want.
Mm-hmm.
I typically just I run off the 15-minute personally. Just because that's what I have seen the most success with, and that's how I was taught as well. Um, the 4 hour is going to show an overall movement over the course of 4 hours, which is good for help with like if you think the market is going to continue higher or lower. But um, I will use these 15 minutes, and I will I will wait. I'm when I'm seeing the market hit this area, I'm gonna watch how the 15-minute candle responds as well as the 1-minute candle respond. Because if you come here, oh, that's gonna be interesting. That should work though. We draw that out, right? And then now I gotta find it. Look at that. So you're gonna see the market closed through it. Market closed through this fair value gap. So this is gonna make you not want to enter. Now, did it close through this opening week gap? No. That's a beautiful sign right there that the market is going to reverse as well on the 1 minute. It didn't close through the opening week gap. If the market's going to close through the opening week gap, you're going to have it go for stuff on the other side. If it respects it, you can expect it to stay on the side that it's on. So that's why I say, yeah, if you if you're going to you're drawing on the 15 minute, but you want to also watch how the candles are responding on the 15 minute. Because if you see something like this, that's beautiful. That's a lot prettier than if we go and we look at it on the 1 minute, because you have this liquidity here. Well, this wick, and look, they're getting weaker. This low is lower than this low, and so forth. And then we have this huge push up from there.
Nice. I want to add that to the books of A plus, probably A plus setup. I
Definitely.
don't know no like the criterias, but if it's just like
Yeah, you
the
joined
last
you joined
efficiency,
late, didn't you?
yeah, I joined a
Yeah,
little
you
bit
joined
late.
late, so you didn't see this. So let me run through this real quick with you. I'm not going to explain the whole movement, guys. I'm just going to show him where the inefficiencies. First fair
Mhm.
value gap, right?
Mhm.
First fair value gap here. Market comes back down. Balance. It always is going to balance. Whatever happens on the left, the market will balance on the right. Market pushed up, failed to take buy side, come back down, tapped off the first fair value gap. We continue to push higher. Market came first fair value gap here. Market tapped, came up, failed to take buy
Mhm.
side, came down, tapped off it. We had a slight push higher before going lower. You come here, market tapped off this first fair value gap, and then we had a push higher. You come here, this first fair value gap. You remember this first fair value gap I just showed you? Look,
Yeah.
market tapped off of it, pushed lower.
Nice.
Market came back up. You see this first fair value gap here? Market tapped
Mhm.
off of it, pushed lower. This first fair value gap, market tapped off of it, pushed higher. Now the issue is we're in all-time highs, so that's why you're going to start seeing these rejections in these areas because it involves standard deviation. But we swept the high, come for sell side. After taking sell side, we create this first fair value gap. Market pushes higher into all-time highs. We reject due to standard deviation and also because of these lows. Market then pushes back down. Where to? First fair value gap. Where can you go long? Here. Market comes back up further into all-time highs. So, of course, standard deviation causes rejection. What happens from there? Market then just resets the entire clock of this
Gotcha.
entire run that I started drawing. Paying attention to those first fair value gaps, paying attention to the order blocks as well. Because not only are you going to have a fair value gap there, you're going to have an order block. Look, there's an order block.
Mhm.
Uh, we come over to here. We have an order block here. Come here. You got an order block here. You come up to here. You got an order block right here. So those you got not only do you have that first fair value gap, you got an order block too.
It's crazy just because I've been trading the order blocks and fair value gaps, and I've been winning
Hmm.
a lot more as of late. That's the main reason why I passed my
Yeah,
150K account. I'm about to
freaking
pass my
beautiful.
50K account on Wednesday because take profit, 5 trading days. But
Yeah.
I'll just say like what I've been using was just the fair value gaps and order blocks because that's all I'm familiar with. I did want to ask you like today, what else have you been using for like A plus setups to get you like big returns, like how you got those payouts like yesterday, for example? Like, what do you see that we possibly do not see?
Let me answer this person's question and then I will answer that. Giant asks, sometimes the fair value gap is violated with the wick to the order flow just below it, and then the next time they return to it, it just touches the top, giving us a perfect entry with stop loss below the bottom fair value gap. So you're wondering why that happens. So sometimes so I wonder if I can find an example. Let me drop to the 1 minute. Oh, that's the 1 second. Whoopsies. Sometimes there's liquidity. Oh, maybe they have a photo. Oh, sweet. I love it. So, okay, Giant, look at it looks like it created equal lows right there. So if you look at the fair value gap on the top, you want to look at the order block. It's trading off the order block in this position, in this situation. It's not trading off that fair value gap. It's using the order block. So that's why I'm saying those two, the order block and that fair value gap are like are the last resort. If it closes through those, you can expect the market to continue in that direction. That's a major market structure shift at that point. The one on the bottom, yeah. Okay, so the one on the bottom, um, the one on the bottom, if you look to the left as well, you see the seven. I don't know if that's saying 7 a.m. or what time frame that is. But the 0700. Maybe if that's what it is, if you look to the left and you see that huge green candle, then the red candle, then those huge multiple green candles, there's a proportion block right in the middle of that, and it looks like the market was wanting that proportion block, but also the candle that's at 9:30, it collected the liquidity that is from the green candle at the right before the 8 a.m. Sometimes the market wants just that liquidity only for then it to go the other direction. That's all it wants. So that's why it closes through it and then comes right back to it. It comes right back above it. But the top fair value gap is playing more into the order block. That's at the very top. I don't know what day this is, otherwise I'd pull it up for you. Yesterday. Is this? That's not it. M2K1. Okay. Wow, I think that opened right to it. Yeah, that literally opened right to it. That's funny. So let's look at this. We have this fair value gap that's right here. Not all this order block. Look at that. It tapped off right halfway off the midpoint of it. So that's what it was seeking. As well as this, it's seeking that over the order block, over the fair value gap that's right there. And if we come down to here, that's what it was reaching for. this proportion block that's right here. It was seeking those things over this fair value gap. But also, I may re-scratch that. Let's see how this looks. The market also wanted this volume imbalance that's right here.
Do you trade off of the volume imbalance?
Oh, dude, they're beautiful.
'Cause
Beautiful
I'm trying to
opportunities.
find a strategy for it. Like, dude, I cannot. I don't know what. Like, I don't know what the strategy could be,
Use
man.
them. Use them for confirmation. If the market's going to want lower, say the market's going down and it goes up to a volume imbalance and it stays under it, that's your confirmation the market's going to push further down. Did that answer your question? I'll show you what I'm talking about here in a second, embodiment.
Gotcha.
So the market was seeking other things than the fair value gap. So that's why it's a good opportunity to pay attention to that. Always look to the left if you're questioning something. Yeah, let me show you this embodiment because I missed this the other day and I was so annoyed by it. I was like, wow. And my buddy caught that trade perfectly. Pretty sure it was Thursday too, because Thursday we had this drop. Did it happen? Was it Wednesday? Hold on. I know sometimes in Q and M in, whoa, that is a candle. I know NQ and MNQ show something different sometimes.
They really do, man. I was trading it the other day, and one was just doing. I wouldn't say they were doing the opposite, but the setup wasn't there for the other one.
Yeah. No, MNQ and NQ will have different things going on. So what sucks is sometimes you gotta be watching both of them. Let's see. Just literally that tiny little box, bro. And you would kind of huge move. That's a 270, $390 move over the course of an hour to 2 hours. And it's this tiny little gap right here. And then even if you missed that, you had another opportunity. Look
So
how the
you
market wicked into this one.
crazy. So do you use the wicks as confirmation more than like the candlestick itself, or like what's
Yeah.
your confirmation?
So if the market, if it's just wicking into that and it's not closing through it, that's a
Uh-huh.
beautiful sign that the market doesn't want to go up.
Gotcha.
It's staying under it each time. If the market's gonna want to continue higher, it's gonna push through it and close on the other side. But the fact that you see one, two, three, three times that it did that and it didn't close through it, there's your entrance right there. And then even if you got this one, look at that too. These two came up and tapped off this one and didn't want it. So you got 1, 2, 3 wicks, 4, 5, oh, what, 6 wicks, 7 wicks. 7 times the market went for these 3 in volume balances, and it did not close above any of them. As a matter of fact, it kept getting weaker. And I mean, even if you look at this, look, lower low, lower low, lower low, right? We didn't make a higher high. If you look at that, not only that, we swept sell side right here. We came back up. Our market responded beautifully to it. And then on top of that, you also have this order block right here. Yep. Yep. Exactly. You have this bearish order block that's right here. Look how it tapped into that. Not only that though, you also got this order block right here. Look how it tapped off those. It stayed under 50% of it. So you have this tap off here, not close through this, push
Crazy
further down.
influences right there. That's a lot of
This come
like
up,
opera.
this, yeah, it's a, dude, once I started to see the market go back down, I was like, damn. I was talking to some people. I was like, I wonder who
Hmm.
got on this trade. And they're like, I'm in it. I was like, you son of a bitch. And they wrote it all the way. Yeah, I was like, you piece of crap. I was like, and you didn't bother to tell any of us. They wrote it to this low right here.
Man, bro, that man must have made some money. That's
No, they did
crazy.
they only did 10 MQ 10 MNQ contracts. They're not
Oh,
they don't yeah, they're not one for anything crazy. Um but I was super impressed cuz I missed that crap. Um but I was also playing chess online with one of my friends. So I
I'm
wasn't really
weak.
watching the market anymore at that point. um but yeah, so you have the market push higher. It doesn't, it reacts beautifully well to this. Not only that, but it stays under this. And then so the market pushes further down. We took more sell side right here. Market pushed back up. We stayed under this volume imbalance and this volume imbalance, and we stayed under 50% of this wick, of this order block. This would have been a golden setup right here. Um, so it's stuff like that. So volume imbalances can be a beautiful thing. Volume imbalances are even targeted by the market. I have seen volume imbalances, the market go for a volume imbalance. Mike has too, because we talked about it once. The market goes for a volume imbalance only for then it to continue in the direction that it originally was headed. I'd love to find one. It typically happens overnight. You'll see the market go for a random dumb and volume imbalance, only for it to then continue pushing. I've been knocked out of positions because of that. I'm so mad. The market moved like 40 bucks one time back to a volume imbalance, only for it then to continue in the direction that my target was in. Knocked me out of my trade. Dang, I was hoping that was one. But you will see stuff like that. Like, um, the market be up here, come down to take this, only then to push higher and go for your target. You had another question too, though, embodiment. What was it before? You are asking something else. Hello? Okay. Anyone got any questions?
Yeah, can we just jump back to the situation you were showing us with the wicks?
You want me to go back to it?
Yeah.
I got you. Oh wait, this ain't the right one. And hey, uh, Riz, that may be what you need to start doing. For you, I don't know if you're still struggling with shorts, but maybe you could start waiting for the market to push back to that very first presentation fair value gap or very first order block for it to then reject and you go short. Maybe if you started waiting for that, that may help you. Um, Also, the other thing, Diane, sometimes like what you were showing too, there's sometimes liquidity right on the other side. So say this is a high, and it is a high. Say the market came back up, took the high, and then ripped back down. That might have been just because the market needed that little bit of external liquidity before it could go to sell side. So sometimes you will see the market come back. It will wick a high only for it to close under or close just below. And then we have sell side. Sometimes the market comes back for buy side or sell side one more time just to take a little bit of it, then for it to rip down. Because like if I go to Friday, where is the open? But I know there was another. See, like here, market came up. It just wanted this little bit of buy side. So we took it and then we just ripped down to sell side. Oh, here is a beautiful, oh, this embodiment here. I hope he's here. There's that volume imbalance right there. Only for it to then rip up freaking $300. I don't trade M2K. M2K is a little bit iffy to me. I'm an ES person over M2K. But I mean, if M2K does good for you, go for it. It's not my forte. I'm gonna screenshot this just because I don't hear him talking, so I'm gonna send him that. Also, guys, I just learned something the other day. If you ever are wanting to have if you ever want to look at my charts and be able to have my charts, I can go right here and I can send you them. And then you can have it, and you can have the layout on your chart. Just learned that yesterday. But I'm able to I could send you this. That way you could look at it and practice on it. Or I could send you my current drawings I have on my main chart. I thought that was cool. Just learned that the other day, literally yesterday. But you can share your charts with people. Did not know that. Did not. Uh, Riz, what did you want me to pull up for this?
I guess it was me talking, no? Not Reese? I'm not sure.
No, I didn't ask any questions so far. So.
Yeah, I just wanted to
I
go
thought you
back to the trade that your buddies took and you missed because there was volume imbalance, and there was a question I would like to
Oh,
ask
yeah, I
about the
got you.
trade. Yeah.
Yeah, so this is Thursday. I gotta go back to NQ1. Okay.
Yeah, so sometimes I would see like this volume balance and the weeks, and I would be looking for 50% retest and that we, respect the weeks and stuff. Yet on the left side, I would notice, for example, here like a bullish fair value gap. If you squeeze the chart, just for example, here before we tapped weeks, on the left side around 11:06.
It closed through it.
Yeah,
Are you
so the
talking about
issue
how
is
it closed through it?
sometimes it pushes through too much, right, and then pulls back. But for example, look, we are forming. We have some bullish moments, basically, right? We have like bullish fair value gap around 11:06, and also we have these weeks past 11:06. See, and they also kind of seem to be respected. This red candle, right, with the large wick. And then it gets me thinking, like I see kind of at the moment I'm looking at two different parties, one pushing price down, one pushing price up, and I see bullish fair value gap and I see wicks, and I'm kind of getting confused at the moment, if it makes sense.
Got you. No, it does. Have a blessed day, Initial. Can't wait to get on chat with you on Tuesday. Yeah, no, that does make sense. So here's what I'm going to tell you in this situation. What we did here, because this is where we reversed. I think we reversed out. Yeah, we didn't. We were in all-time highs in this situation. When you see the market, if we've taken buy side after buy side after buy side liquidity, you see the market come up and it sweeps that first fair value gap, right? Okay, there could be a potential of a reversal here. It swept this bullish, it closed through this bullish fair value gap. Next thing you're gonna want to do, look to see where the low is. Okay, the low, we swept this, we inversed this fair value gap. So now it's a bearish inversion. Next thing I'm gonna look for is see where it could be drawn to on liquidity. It drew to this right here and swept it, right? Okay, we just took sell side. From this point forward, I am no longer paying attention to bullish fair value gaps. I'm not paying attention to bullish order blocks. I'm ignoring them. Until I see buy side get taken, until I see the market come back up. So let's say the market came back up, created this high. We had this push down and the market came back up and took this high. Until I see this high or this high gets taken, I am not paying attention to anything bullish anymore. From this point forward, I am paying attention to bearish fair value gaps and bearish order blocks. And then I'm looking for the market to create inversions to the downside. So I'm no longer paying attention to this bullish order block. I'm not going to pay attention to this bullish order block. I'm not paying attention to, these are now inverted, so it's not like they matter or anything. The market needs to come back up and take this high, or take this high. Say that came up, down, came back up, swept this high. Okay, cool. So now I could be considering paying attention more so to bullish order blocks and bullish breaker blocks. But since we just swept a low, now we've had a market structure shift at this point. So, okay, so let's see what happens from here. The market swept this low, came back up. We tapped in, nope, that's not an order block. Can't use that. It might be though on a smaller time frame. Well, no. So what we did, we tapped off this bullish inversion or this bearish inversion. So the market used this now to push lower. Okay, what happens next? We swept more sell side. So now you have more indicators that we're going lower, that there's an inversion happening. What happens next? Market pushes back up after taking more sell side, and we tap into this bearish order block. My shift has now, I have now shifted from being bullish to bearish, and I'm paying attention to only bearish, the only important things. Yep. So the market, there's no fair value gap here. So if the market's going to push lower, it's going to respect this bearish order block right here. And what did it do? It respected it. There's no fair value gap right here, and there's no order block right here. So what's the market going to have to do if it wants to go lower? It's going to have to respect this bearish inversion that it closed through. So market came back down from there. What do we have here? We have another low. Market swept this low right here. What happened? We pushed back higher. Yes, we created this fair value gap right here, but the probability of it getting close to is very high at this point because that's 1, 2. So we have 1, we have 2. That's multiple confirmations right there. And it's staying under this. There's 3. We push below further, comes down, swipe, takes this liquidity here, pushes that back up, stays under this. That's another confirmation. Market then pushes further down. Sweeping this liquidity here. And also right here. And then even right here. Before we have that pushback. Now, why did it stop right here? So what we'd want to do, hopefully this doesn't take me to, oh, beautiful. I love it. Sometimes you gotta hop to different time frames to see why we stopped right there. Look at this pushback up that we had. You can draw out that wick right there. Now, that should be the correct one. Go back to the 1 minute. Ah, it did it to me. I had a feeling it would. Oh, that wasn't the right one. Okay, so it's this push back up to this one right here. So then let's come back. Could be the 15 minute as well. Let's just push back up and, oh, there it is. This is a order block. It's a bullish order block. So we can come back now to the 1 minute. Market stayed under 50% of it. But I mean, even if you wanted to do that, I mean, you can also use this inversion that's right here. Does that help at all? Usually if we've had a market structure shift, start paying attention to how many drawings. I shouldn't have a whole bunch of extra drawings on here.
Would you say that market structure has shifted at 25,120 because it was our previous swing high and then we closed below that 25,120?
Right here? No.
Yeah, because it was a previous high, right? And we took all this liquidity above, and basically it was a trap of those buyers who bought late at the very top.
Are you talking about here?
Yeah. Since we closed, like, since we swept the whole top, right, and we closed below this previous high, it means that a lot of people are trapped. So that was not the perfect example. That's why, I mean, obviously, I would look at the higher time frame since we swept so much liquidity, right, and it's all-time highs, and I know, I understand that.
Yeah.
But like in another scenario, this is like if we are somewhere in the middle, for example, this is where I'm talking about that, like I see some bullish indication and then I get see like, you know, bearish weeks, and like they're kind of conflicting. But this one is quite clear to me because I would look at the higher time frame first.
Mm-hmm.
But yeah, like where exactly would you determine this market shift? Was it safe to say like 120 and below, or no?
120 and below. I mean, in my opinion, once we swept this low, that's when I'd be like, okay, we're having a major market shift. Or you could even do this low right here. Are you talking about for bearish though?
Yeah.
Those would be, since this is the lowest, the previous low that we had before the run, before that final run up, that's once we close below that, that's when I'd consider, okay, yeah, definitely a major market shift to the downside at that point. Now, the moment, really, when you see the market start creating lower highs, that's when we're starting to have a market structure shift. But like, you could always wait, and like you said, go to a higher time frame. Like we could go, let's check the 5-minute first. See, like that's the lowest low, really. Even though, of course, we came all the way back, take us back to the beginning. But we had this push up, then we had this push down, swing high, swing low, swing high. Really, once the market really closed below that, that'd be your prime example. And you even have an opportunity right here with this fair value gap. So you would have that confirmation, push back up, you could draw this fair value gap, market comes up to 50% of it, and yeah, I use inversions. That's what I have drawn out right here. But that could be your confirmation, because that's the last low that we had before that swing high. Let's look at the 15, see what the 15 looks like. And it's the same thing, really. Last low before it push up. Not only that though, you could even wait. We have this this order block that's right here, and the market closed through it on this candle, and then the market tapped off of it right here and pushed further low. But whoa. Okay, you want to load? There we go. And this is a Thursday too. That's why I was surprised. That's why I wasn't paying attention really anymore. I was like, okay, this is a Thursday. Not much is gonna happen, because 9:30 open and we had this bull crap right here, and then we had this, and then all of a sudden just it did all that. But yeah, I mean, and then truthfully, you could even use this as a market structure shift, because we have the push up, push down, push up. But the market inversed this bullish, and it inversed this one. Then what happened after that? We collected this liquidity. We pushed back up into this inversion, tapping off the 50%. That could be your sign for an entrance. We pushed down, collecting this liquidity here. Initially, we rejected this bearish order, this bullish order block. We had this push back up inside of this bearish fair value gap, which is then where we had this push further down, collecting this liquidity. Initially, we respected this fair value gap here, which is what? The very first fair value gap in this push up, because we have this push down, then push up. So we respected it initially. What happened from there though? We pushed higher back into this bearish order block. We respected it, literally just tapped off of it. And we stayed under this volume imbalance. So this is another sign to go short. We have this push back down, collect more sell side, push back up again. stayed under this volume imbalance and this volume imbalance. We came back down from there, sweeping this sell side right here and this sell side right here, where before we had to push back up once again into this bullish order block and this bearish inversion, where we tapped that bearish inversion, stayed under 50% of the order block, where then we push lower. So there was multiple setups. You would have missed what, $73. That's only a $70 difference. So even though the market moved $70, well, its final destination was still another $250. So you may have missed the $70 entrance if you waited a little longer, but then if you got in right here, you could have then later, Daniel, you could have then still made a majority of the move. I wonder what's down here. Let's see why it stopped.
Yeah, it was just kind of hard to see, in the moment, like being there. Just had to estimate that we're gonna run like 250 points, like I would be happy to collect 30-40 bucks on NQ, and then like the run was good.
No, yeah, I get you. Let's see what it looks like on the 5. So it was this order block. Yeah. What about a 15-minute? Why is my thing being weird today? Yeah, so it is that order block on the 5-minute. That's why it stopped where it did initially. And then it pushed lower actually. Now, one thing I'll tell you guys, you want to see, just because it wicked past it, later, Ken, just because it wicked past this doesn't mean the market's going to continue further down. You need to see the candle close below. You want to see that candle close below this. A wick does not mean the market's going to have a further push down. Don't get confused on that. Any questions, comments, concerns?
Can you quickly remind me the difference between the proportion block and just regular order block?
They're the same, bro. They're just proportion block's just a fancy term for it. I mean, they're not the same, but they are the same. There's just it's an interesting conversation piece to have. But yes, I got you. I did not just mean to remove my indicators. Okay, there we go. So, a proportion block. So a bearish order block is typically going to be at the top. It can be 2 or more green candles followed by 2 or more black candles. So like me personally, if I'm going to make something a bullish order block, I'm not going to make it this wide ass order block right here with these 3 candles, 4 candles. That's just too much. You gonna enter right here sometimes, but the market gonna push up into here before going down. So I will always use this. I'll always use the one that's like basically at the top or the one that's at the bottom. So like in this situation, I'm using this one right here for my bullish order block. This would be my bullish. This would be my bearish. As you can see, the market came back, tapped off of it to push higher. Or you can, here's another one, this one right here. Now you see why I use this one though, and not all three of these. I mean, yeah, it still works out in my favor, but what if you not only going to have a huge stop loss, but if you enter here and for some reason it wants to push all the way to like this area, it's a $20 move right there before it reverses. You're going to be in the red wanting to close out your contracts because you're going to be nervous that you're going to hit your stop loss. So I always use the one that's furthest away. Tighter stop loss, less risk, much more comfortable trade. Happier me. Less nervousness. I would hate to be entering right here and then it makes it all like right here and I'm like fuck. Only for it then to play out. Because you're over there crossing your fingers saying, Lord, if you just this one time, just help me out here.
Till the next time.
But yeah, I just need you this one time. um, so
Wait a second.
that's why I use the one that's furthest away.
So yeah, sorry,
What's up?
a bit of delay. So 11:10 a.m.
Oh, you're good.
here. So first tap into this bearish order block. Would you enter right here on the first wick, or would you like wait for the candle to close and then on the second tap in the same area you would enter? Because this is I'm trying to be more cautious because you know it can wick through and the next candle can go up. So first I want to see some kind of reaction, and then on the like kind of confirmation in a minute or two I would try to enter. How would you approach this one?
It's 100% based off of you and your personal experience. What I want to see is I want to see the market, the candle push up to it and wick hard back. That's a good sign. If it pushes up to the very beginning of it and then we have this huge hard pushback, that's a beautiful sign. Because sometimes if you wait too long, you're gonna see let's say like let's say this is an order block. It's not an order block. Please do not get this construed. You see it wick here, you see it wick here, but all of a sudden it closed down here. Now you're $15 off from your entrance. Okay, push back, touches off here. Okay, let's see what happens on the next candle. Wham. So the market can shift on you very, very quickly and you miss that perfect entry. So what I'm wanting to see is I will sometimes do it on the first candle, sometimes the second candle. It depends on how the market's moving, the day, and what's the scenarios are different every time, you know. If I see the candle push up and wick hard back, that's a beautiful sign that this is a very strong area. If I see the candle push up into it and it's closing around in this area, that's not as beautiful of a sign. I'm going to want to wait for the next few candles, next candle, next two candles to see if it pushes back down or if it's going to push higher through. So it's really dependent upon the situation, but just pay attention to how it's responding to that area that it's tapping into. If it's wicking back hard, okay, well you can enter there, or if you want to wait one more candle, see how it responds. Okay, you can then enter. Just it's personal preference, and really you don't jump in on the very first candle due to FOMO. But be smart. Plus, it's also a bullish market structure change and then fail. Yeah, there's nothing wrong with having the side of caution. It's just sometimes if you have too much caution, you're gonna miss that trade, and then your entrance is gonna be bad, and then the market can push back on you and take your stop loss, and then you lose more money because say you want your stop loss up here, but for some reason you see the candle wick and then it slams down and then you enter down here. Well, now you got a higher stop loss because that's 107 to 128 or 129. That's $20 move right there. And then on top of that, you got 129 to 150. So that's a $35, $40 stop loss you got right there. So that's over 500 bucks on a mini. Well, it is 500 bucks just about. So you gotta use analysis, and it comes with experience. Typically, sometimes I'll enter on the first candle, sometimes I'll enter on the second candle. If the first candle's showing really good, a really good reaction to that area, then I will enter there. What's the worst that can happen? You're wrong. Okay, you're wrong. Okay, you lost a few $100 or you lost $100. That's fine, you know, because I promise you on the next trade you take or the trade after that, you're gonna make more than it back. I know we connect pain to loss. You gotta be willing to take that risk sometimes, you know. Um, and it's a sucky part about it. No one wants to lose. I don't like to lose. I lose still, but I know the next trade I take, I'll make it back. The thing, guys, is we always are gonna make it back. You may take one wrong trade, you may take 2 or 3 wrong trades. You're gonna make your money back, especially if you don't just quit. You keep trying. It's gonna happen. When I first started, before I even met Mike, and I was learning from this dude named Kai, I lost for like 2 weeks straight. Well, each time a day. But the thing with me is like, okay, this is just part of the game. You know, you're gonna lose and you're gonna win. If you have proper risk management and proper discipline, your wins will outweigh your losses. You're gonna have some bad weeks. You're gonna have some good weeks. It's just part of this game. It's the sucky part, but no one wants to have a bad week. But having proper risk management, man. I mean, like, let's say I had a $4,500 drawdown, 129 to 155. That's what, like a $350 maybe stop loss. I would have to lose like 15 times. I'd have to take 15 bad trades for me to blow that account. If you manage to take 15 bad trades in a row, you need to go back to the drawing board. It's not something that like that should happen. Now can it happen? Very much so. But usually that only happens when we start over leveraging or we're just trading the trade because we want to make the money back. But yeah, to answer your question, Crimson, well, if I see the bioeffigy getting respected, I can put my stop loss past 50%, right? Not the whole fair value gap. I would put it more around 75%. So like what you could do is you could take a fib, draw this out, find the 75% mark, put it there. Sometimes it just wants 50% of it. And if you start to see the market head up towards it, it's on you, depending on what your risk management is and what your rules are, but then you can move it a little bit higher past it. Because like what Jyan posted, sometimes it just will wick. The market can literally come up through this order block, wick past this high just to collect the liquidity that is resting right here above it, only then to dump after that. That's why you never want to put it right there at the top. You want to do just a tiny bit past it. Did that help, Crimson? Hell yeah. What other questions y'all got? Sorry. Are you still using the new bias? No changes yet. Midnight London open, I mean. So you talking about, one second. Yeah, I still use that. So like, you talking about if we open at midnight, we go higher at the open at midnight, then we go lower during the London. We'll have a retracement back up before open, and then we'll drop during the New York. Yeah, I still use that. Can I show you some GC trade? Can you tell me what GC is? Gold trades that you took. I don't remember all the trades I take, but I'll try. You talking about through here? Oh wait, that's Thursday. This was Friday. I didn't trade this Friday. I traded the night at night, which was here. So we had the new day opening gap. Market failed to take buy side. Where I got in at was once it closed through this new day opening gap. And then that's when I attacked this area right here. Because this was the first fair value gap. And I had the feeling that the market's gonna go low, it's gonna attack right here, and there's a chance it could stop right here. So I shorted right here down into here. I wanted to see it close through the new day opening gap though. Because like I said, if the market's gonna close through it, there's a high probability that it's gonna take liquidity on the other end. If it's gonna come back through it, there's a high probability it's gonna take liquidity on the other end, but it just wanted to play games all freaking night. Cause I actually longed. It was on a paper trade though. I longed after we took that. And I thought it was gonna close through. But like I said, you got those freaking order blocks. Order block stopped her. Didn't close through it. And that's why Mike, you gotta be careful. Cause like I was saying, anyone's gotta be careful. I'm not even just talking to you, bro. I guarantee someone entered around this area. They probably waited for it to close through this order block right here. Entered right here with attack to here. Got up to right here and then got murdered out of their position immediately after. Is it true that holding trades this long is if you are above buffer zone, I mean an intraday account, I would have gotten a heart attack even when I am in profit. Yeah, so I mean, when you're in drawdown still, I would set your your TP and your stop loss. I wouldn't let things run. Cause if you're in, yeah, try and draw it, yep. when you're out of buffer, you can trail contracts, you can let things run, you have freedom with it. When you're not in trailing drawdown, that's not a fun situation. What a wick right here. Dang. How much is that? 320 to. You traded that? That's still amazing money. What you mean? $800 is $800, my dude. Be proud of that. Some people, it takes them a week to make that. Here in the US, some people don't even make that in a week. Some people don't even get that in 2 weeks. And that's okay. It better be at break even than in the red. Nothing wrong with being at break even. Time will continue to help you. Time is your friend. Let time and compound growth help you succeed. Don't rush this process. Guys, when you're trading accounts, I mean, if you're on a mini, if you're doing minis, every 10K in profits, you can add another mini. Every $10,000 you make on that account, you can add one other mini. So if you have 10K in profits, you trade one mini, or you can trade 10 micros. If you're at 20,000 in profit, you can trade 2 minis, or you trade 20 micros, and so forth. That's the general thesis you should be following. Because an account that has 5 grand in profit, it can't handle 10 contracts. It can't handle 15 contracts. Unless you are literally a sniper when it comes to trading. You don't do that yet. Like, the only time you should be trading 15 contracts is when that account has at least 100 grand in it. I would say 150 grand in it. It makes me chuckle too, because they give you that 150K account. Truthfully, bro, that 150K, they should just make it a $4,500 account. Yeah, $4,500 instead of making you feel all special saying you have $150,000. I'd laugh at that. Like the 25K accounts. Yeah, no, it makes sense. I just think it's funny because you don't have 150 grand. When you tell people, "Oh, I got a 150K account," it just makes you feel special. Hey, yeah, true. I mean, guys, even if you do, I mean, it's a good opportunity to try to win some money if y'all want to do that. 1,500 winners. 4th through 400th place, $100. Hey, you're still $100 richer. That'll be fun. I'm trying to remember the other night. Well, that actually doesn't help because it was this night. I did it on a paper trade. I was a little bit frustrated about that because I think I ended up making like 5 grand. Um, yeah, I got y'all. We'll split it. Each gets $100. You get 100. You get 100. Everyone gets 100. I'll be like Oprah Winfrey. Nah, my mentor's doing it, and he would wipe the floor on me. He's actually I finally think I convinced him to buy 5 take profit accounts just for fun. Because he was asking me the other day. So he was like, so I buy 5 take profit accounts and I make 40 grand on them a day. Can I withdraw all of that per account? I was like, well, you can't make 40,000 a day per account, but you can make 10,000. Now I'm pretty sure if you get moved to a live, I think you can make as much as you want. I need to tell him that actually. That dude does some crazy trades. I see him in trades sometimes, and I shit you not. I've seen him in trades where he's up over 100K. He just doesn't show it to most people. It's wild to me. Nope, he is not holding it for a few days. He is a day trader. He's the one that taught me how to call the market. Yeah, no, he taught me how to call the market. So this man, he knows every single day where the market's going to go. I have never seen him miss. Never. He has never missed. And he sent me some screenshots because we'll share our profits together sometimes because I don't post all my profits on here. But golly, it just makes me jealous. I'm just like, and the dude will run 30, 40, 50 minis at a time sometimes. It is insane. He's got a crystal ball. The dude has spent like what, I think 9 years now, 8 years. He's watched Balls of Steel. He's watched every ICT video from the beginning. So he's watched 2024, 2023, 2022, and so forth. 2025. And he said he told me how he used to spend 18 hours a day back testing and forward testing. And how like for a period of time it hurt his relationship with his woman because he spent the entire day on the computer. But now he doesn't have to do that. He's off by 11 in the morning. He's a stay-at-home dad. His girl doesn't work, and they just travel and spend time together with him and his kid. He trades from 9:30 to 11 every day, which is where I got my time window from. That's why I trade 9:30 to 11. And then I enjoy my day. Sometimes I'm still on the computer after 11. It's mainly because I'm practicing, or I just still see, or I'm not happy with my profits yet, which I still am working on. I need to learn to be happy sometimes. But it's kind of it's crazy. That's impressive. A lot of people can't do that. Yeah. No, I have to continuously remind myself too that, man, because I sometimes forget that like I used to work for $10 an hour, $15 an hour, $18 an hour. So I know what you mean. And I still live on a budget. Even though my girl will tell you I'm bad at it, I still don't know how to budget too well. She needs to be my financial advisor. What other questions y'all got? Yeah, I know. She's been telling me I need to start putting money away and stop leaving it in an account. That'd be smarter. Huh, damn. Why do anything I want though? I don't have to live like that. I'm happy with the life that I have. Um, for a little bit of time, I started spending money on materialistic things and the stuff that I wanted, and I realized it didn't make me happy. Um, I realized I didn't need to live like that. Um, honestly, Emma's like truthfully all I need at the end of the day. All I need to have is Emma, my woman, my fiance. That's what makes me happy. And she continuously shows that to me, no matter what. She's the only her and God, and then the people I call family. That's all I really need. Everything I need is always taken care of. I don't, the wants that I have, you know, th those are things that, yeah, they'll make life enjoyable, but it ain't gonna give you true happiness at the end of the day, because all we are gonna want is more and more. Mm. No, all I care about now at this point in life is God, Emma, and I want to travel and have memories, good memories. Financial security is great. That's all I really want to have. I just want to have financial security where I never have to worry about anything. If something comes up, I know it can be taken care of, whether Emma lets me spend the money or not. Yeah, that's one thing I've learned is like, I don't know, and I'm still young. I'm not like older person. It's just like my priorities have kind of shifted. If I want to have a Ferrari and everything, I'll enjoy that later on in life. I'm 27. Really, I just want to travel with Emma. I mean, and then when we get, I want to be able to give her the wedding of her dreams, and then I want to be able to travel with her, and I just want to be able to provide for the kids we have. That's really all where my mind is now. I don't really care about all the shiny and fancy things. Yeah, it'd be cool to have. Yeah, it'd be nice to have, but like I don't really need it. I've kind of realized. Armenia. That sounds, dude, I want to travel so bad outside the States. It's just, unfortunately, I was dumb when I was younger, and some countries don't really, I have to wait a few more years before the countries would let me in, let me visit, just because I decided to drink and drive and do stupid stuff when I was younger. So you have to wait like 10 years for some countries to let you in. Well, thanks, Riz. Way just to rub it in, bro. I want to take Emma to Hawaii. You don't have to carry a knife. Well, that's good. I can't even have a gun. They don't feed y'all good food in college, in schools there? I thought other countries are like the only countries that feed people healthy food outside. The US just feeds people crap. We get pizza and fries, hamburgers, barbecue sandwiches. That's what Emma wants to do. She wants to get an RV and just travel. I'm all for it. And then like one thing we talked about, and I know she wants is she wants a house with a grand entrance and stairs rolling up the sides when you enter, and out on a farm with animals, and um just be able to live off the land. I'd be all down for it. We would just have to make sure we remember to water our plants. I don't know if she can hear me say that. I hope she heard me say that. Oh, she's typing. True. The earth does rain. I can't forget about that. Hey, I didn't say you have to remember, babe. I said we have to. Yeah, now you see why I couldn't post in the group chat that I was going to propose to her. She's in here. Mike was like, and you didn't tell anyone? I was scared to even DM you, Mike, because I was like, what if he accidentally says something in the chat? I was scared to tell anyone. I didn't want her to figure it out this time, even though she had her suspicions, and she said I kind of threw her off, but she still kind of knew. She's too much of a smart cookie. She has too good of intuition. I know. I just said you're a smart cookie. I'm hyping you up over here. I'm your hype man. Come on now. Yep, that's her. We're gonna move out of here to another state when we get the chance. I'm still having to wrap up my past here in Georgia, so once I get all that stuff pushed to tucked away finally from it happening like many years ago. Still dealing with it. Once we get that all handled, we're moving. She doesn't like living here. It was a blessing to get her to move here. She don't like the traffic here. Everyone's out to get her, she says. Well, Hawaii would just be for like a vacation. I don't think she wants to live there. Plus, we'd be so far from family, and she's a big family person, like I am. Yeah, we both do. We love cute little towns. Wait, Crimson, I got you at 3. Yeah, I do have you at 3. I'll see you at 3, brother. Uh, yeah, I mean, I'd love if they're interested in it, I'll teach them. Um, that'd be cool, you know. I'd love for them to have financial freedom, in that aspect. But of course, they're gonna be their own person, so whatever they end up wanting to do, I support them in. I know we both will. Have a great weekend, Crimson. Well, I'll see you in a little bit. I I don't I don't think Emma gonna be cool having a dozen kids. Yeah, we talked about 2. I don't know about 10 extra. I don't think she'd be all hyped up for that one. Plus, I'm like 6'2", and I'm like my shoulders are like 4 feet in diameter, and she's 5'4". So I don't think having kids would she. I don't think she'd be too crazy about 12 of them. Although, if we had 12 kids, that would set us up for us to just relax and enjoy life. Let's see what we wouldn't have to do anything though. Do you know how much our odds would be that we'd have like a professional athlete and then like a scientific whiz? Okay, if we can't have 12, what about 11? Can we have 11 kids? Yeah, I'm just joking. Have a football team. That's great. I love it. How about quadruples twice? Two. Wait, that's 8. No, I'm happy with just 2. Mm. Exactly. That's all that matters to me at this point in life now. Yeah, she learning. She picking on quick too. She's a smart, like I said, she's a smart cookie. She's picking up fast. Our goal is to be able to get her out of her job, um, and then she just be able to trade in with me, and then we travel and settle down. You have a blessed weekend too, my dude. No, she's at work right now. See you on Monday, brother.